Hello, I'm Vishesh Bhojani, Investment Product Manager at Sun Life Global Investments. Today is March 16th. I'm joined by James Collery, Senior Portfolio Manager from KBI Global Investors, to discuss his views on today's market environment and how the Sun Life Global Dividend Pool is positioned in times of heightened volatility. James, can you please tell us about your views on what's happening in the markets?
With the rapidly deteriorating daily impact of coronavirus, its detrimental effect on markets, we now believe there is a very high probability of a global recession. Typically, past recessions have triggered equity market falls of between 20% and 40%. However, deep recessions may lead to larger losses. For example, we experienced falls of 59% in 2008. With the announcement of yesterday's rate cut and stimulus plan, we see this as the beginning of a coordinated policy response. We expect this to continue globally, with stronger fiscal policy also coming to the fore. However, uncertainty in markets is likely to prevail for some time, with heightened volatility a pronounced feature of markets for the foreseeable future. Although we do believe this outbreak to be a temporary phenomenon, the impact on markets will have a longer effect. To put this in context, the global financial crisis initially hit equities in 2007, and the subsequent bear market lasted for 16 months. Times like these, it is essential to realize stocks are a long-term asset, and while earnings will be severely impacted over the next 12 to 18 months, strong companies with good corporate governance and well-managed balance sheets should be able to generate future earnings post this crisis.
Have you changed the positioning in the fund given the current environment?
We have not changed our fund positioning. We make highly diversified, defensively orientated portfolios of dividend, high-quality stocks. We always have one eye on the risk levels in equity markets, and we expect that our portfolios are well positioned before events like those of the last 2 weeks unfold. We believe it's a mistake to make knee-jerk reactions to market events, even such dramatic ones. The nature of animal spirits is always to do something, but periods of radical uncertainty and high emotions are always the wrong time to make such decisions. Also, spreads in markets are very high at the moment. Liquidity is poor with evidence of price gapping. Our mindset is always long-term. We are not daily traders, and we believe in an unemotional approach always works best. Specifically in relation to the coronavirus, nobody in financial markets is yet in a position to forecast the spread of this pandemic, the disruption to production chains, or the scale of its impact from an economic perspective. We strongly believe it is prudent to continue to target long-term, sustainable dividend-paying companies that exhibit strong balance sheet strength and quality in these difficult, volatile times.